Legacy Income Properties is turning the idea of traditional real estate investing on its head. When you think of traditional real estate, you envision a piece of property where a building will be developed with tenants waiting to fill the spaces and pay rent, thus making your investment profitable. At Legacy Income Properties, we provide a real estate opportunity where there's more to our real estate than meets the eye. Driven by the recent boom in technological developments, you now have the opportunity to trade in traditional tenants and brick and mortar for underground mineral tenants who don't just pay today, but provide an opportunity for generational royalties, a true legacy asset. Let's take a closer look. We all know the rule of diversification when it comes to our investment portfolios. We also know how difficult it can be to find an asset not tied to the stock market, yielding returns and protecting you from inflation. Oil and gas minerals and royalties have been available for over 100 years, but have mostly been handed down from generation to generation. There's always been only two parties involved with producing oil: the clampets, or the mineral owner, and the oil company. Now, thanks to advancements in technology and billions of dollars of capital being invested by major companies like ExxonMobil, you have the opportunity to be the clampet of this generation. Vast amounts of land are now known to contain tremendous resources right here in the US, and they're available for you to purchase. So here's how it works. Back in the day, you'd punch a straw in the ground and hope you'd hit a patch of oil. The odds weren't in your favor. Shale formations take the guesswork out of finding oil and gas, like a blanket that's many times larger than the oil patch was, and isn't patchy at all by comparison. The technology of horizontal drilling, along with fracturing technologies, make these shale plays available and dramatically mitigate geographic and geologic risk. We select various producing and non-producing pieces of land and on targeted properties throughout the most active shale plays in the United States. These shale formations blanket thousands of acres underground. But when Shell, for example, drills a well, they only have to drill in a section or area, typically 640 acres or so, where you own minerals in order for you to get paid a royalty. So by way of comparison, Shell in this example is the tenant in our building, and they'll pay us royalties or rent on what they produce. By purchasing tracts of land spread across various shale plays, you can diversify your exposure to different companies or tenants, different buildings or tracts, and different neighborhoods or geology. To learn more about mineral ownership and how they might benefit you and your family, contact LIP at www.legacyincomeproperties.com. Take the time to look, and we know you'll see there's more to our real estate than meets the eye.